All right, guys, today I'm going to be going over the most important ICT concept that you need to understand, which is AMD. What is AMD? Accumulation, manipulation, distribution. It's basically the same thing as PO3, but on the chart, I'll explain more in detail. Let's get into it. All right, so AMD is similar to PO3, which is power of three. If you don't know what that is, it just pretty much shows you how the candle is formed. Which is basically just open, high, low, and close. If you don't know what that means, I'll show you real quick. I'm not gonna get too much into PO3 today, but I'll show you what PO3 means. So open, high, low, close of the candle. Let's look at the candle real quick. Right here, if you could see this bullish candle right here, this is the open right here. This is the high. This is the low, and this is when it closes. So I say AMD is kind of like power of three because power of three is really just accumulation, manipulation, and distribution. So on a candle, this is how it looks, right? So it opens up, it'll accumulate a little bit here, and then this is the manipulation leg to distribute, and the body is the distribution, and then it would normally come up and come back down and close back in the range. So that is what PO3 means, but on a candle. So when you're looking for AMD on the chart while you're actually trading, you're gonna look for that, but with multiple candles. So I found this example off video because I didn't want to have to keep looking, but this was easy to find because I actually took this trade on a Friday last week, and this was the perfect AMD setup. So if I were to make this into one big candle on a higher time frame, then this is how it's gonna look. So let's say it opens here, it accumulates, and then it forms a wick up here, because this right here is the manipulation, right? This right here. So that would be the top wick, and then when it's time to distribute, that's what forms the body of the candle. So that's the body, right? It comes all the way down here, and then let's say we end the day right here, right? Because that's the end of the trading day. So now the body doesn't close here, right? It comes back up and closes here, but since we went down further, that is where the bottom wick is created, because it went down to here and then retraced back and closed in the range. So that would be how the higher time frame wick would look on maybe like a 4-hour or whatever higher time frame you look at it. So real quick, just to go over everything, this is where the candle opens. We accumulate right here. We have a manipulation leg up, takes out a high, comes back down, and when we distribute, we form the body of the candle. We distribute all the way down, and then once we retrace, we form the wick and we close, and that's where the body would close. So that is PO3 on a candle, and this is the AMD model right here. All right, so now that you know what PO3 and AMD is, let's look more deeply into the charts and talk about what I need to see to take an AMD setup. Okay, so when you're trying to take an AMD setup, you have to have a narrative behind it, because if you don't, you're not going to know which way it's going to manipulate and which way it's going to deliver to. In this case, our higher time frame draw on liquidity was the Nvidia lows that got left open from a couple of days ago, and also on a higher time frame, it was looking like a maker sell model. So that was our draw on liquidity. That was the narrative that we had behind this trade. When we're looking at the accumulation phase, I need to see a high that's been left open. If we're going bearish, I need to see a high that was left open before the accumulation, so that way I know that there's still liquidity resting behind that and on top of it. Another thing about the accumulation phase that I need to see is that it can't be a really small accumulation area. So like I need to see a bunch of candles. It can't just be like 5 candles, you know what I mean? The more candles I feel that is within the accumulation range, the stronger the delivery is going to be. So as long as there's like a range with multiple candles that didn't take out the high behind it, then I consider that a good accumulation stage. After I identify a good accumulation area, I need to see a manipulation leg sweep that high, preferably with one candle, come right back down, leave a big wick like this. That's like the perfect sign of a manipulation. After the manipulation, I need to find my entry. In this case, it was like the perfect accumulation, manipulation, and entry for the delivery. Because this is a singular fair value gap, I trade where I need to see a sweep in liquidity, and then I need a inversion fair value gap. So in this case, we swept liquidity, came right back down in one candle. We kind of like played around a little bit, but once we opened at 9:30, we got that 5-minute closure under the inversion fair value gap. So that was a perfect entry to a perfect manipulation from a perfect accumulation stage. Once I saw that, I got in, put my stop above this swing high. Oh, I don't think I put it that high, but I put it up here above that wick, and I was targeting the data lows, which was 203 points. And as you can see, this delivery was really strong because I feel like that has been open for a couple of days and it was due to get hit. And if you look, we were kind of in a market maker sell model back down. Even inside the accumulation phase, right? It's building up a bunch of LR, generating liquidity, right? You see all these failed swings. It makes it even better for us to just run through all of this, go take that high and have a rejection wick and come back down to distribute. After we take out all this liquidity, we have fuel for us to distribute down to the data lows. So basically that is AMD, aka PO3 in a nutshell. I'm gonna try and keep this video short, but yeah, that's the most important ICT concept that I think everyone should know if you're trading ICT. Even if you're not trading ICT, that concept, that is a very good concept to understand, because when you look at candles, you'll kind of be able to identify if it's just a manipulation or if it's going to form the bottom wick and then distribute back up or back down, or you know what I mean. So it's a good model to learn and kind of understand. Even if you don't trade ICT, it's good to know it. But yeah, that's the end of this video. I'll catch y'all on the next one. Peace.